Whether you are renting and curious about renter's insurance or you are preparing to own your own home and are looking for homeowners insurance, we want to provide you with helpful information on what they cover and how to save on them. We will also briefly cover mortgage insurance and how it differs from homeowners insurance. Renter's insurance is when you have a policy to protect your items in a home that you do not own. So let's dive into more specifically on what these policies can cover. Renter's insurance is a really useful tool to have. It can give you added protection when renting a property by giving protection on your personal property. If you are found liable for someone else's injuries or damage to their property, this may pay for the medical bills and legal fees too. In the event that something happens to your rental home and you are unable to live in it, the additional living expenses could cover costs for a hotel and other expenses according to Bankrate.com. Some insurance companies may even offer pet liability. This can be helpful if you have a pet, as it also covers accidental damage that your pet may cause. The great part is that while not all states require renter's insurance, it is available in all states. Now that you know its importance, let's talk about how you can save on your policy. There are a few ways when shopping for a policy that you can look at that can help with saving on your renter's insurance policy. One way is by bundling your policies. So if you have a car insurance, check with your car insurance company if they offer renter's insurance, and then try to bundle the policies to save more. In addition, if your landlord has installed protection devices like smoke detectors and security cameras, those measures can help lower your rate for insurance. Even simple changes like setting up an auto pay or updating the deductible to be a higher amount can lower your insurance payments. Lastly, as experience shares, you may be a member of an organization that gets a group discount with certain insurance providers. Homeowners insurance, unlike renters insurance, is required by the majority of home lenders. Provides coverage and protection on private residences to cover loss and damage to private property. According to the Consumer Financial Protection Bureau, it does not cover damage from earthquakes or floods, but if you live in a prone area, you can possibly add it to your coverage. It is not the same thing as a mortgage insurance. According to the Consumer Financial Protection Bureau, homeowners insurance is essentially a hazard insurance that can help cover the cost of damaged or stolen property of your home. They share on their website how many people will pay the insurance through an escrow account that is part of their mortgage. They also share that the cost of the insurance should be listed on your loan estimate under the projected payments section. They do encourage you to do your own research to find the best option for you. As it is required by lenders, if you do not purchase insurance for your home on your own, the lender will then purchase it for you and notify you of what you will owe. According to NerdWallet, there are a lot of things you can do to help save on your homeowner's policy. Raising your deductible will reduce your premium. Also, having safety and security items like a burglar alarm or smoke detector can often save you money. When you have a minor item come up, avoid putting in a small claim, as some insurers, according to NerdWallet, may offer discounts for being claim-free. Even asking for other discounts, from setting up auto payments to paperless billing, or even being a smoke-free house, among others, are things NerdWallet shares may help you find insurance discounts. When it comes to home improvements, if you are making your home tougher to reduce damage, this can help with insurance savings, as they'll see it as you reducing the risk for submitting a claim. Similar to the renter's insurance, you may be able to bundle the home and auto policies or other policies you have with your insurance to save. Lastly, things like improving your credit score or getting rid of items that are likely to cause injury and increase your risk for filing a claim can also improve your rate with the insurance companies, according to NerdWallet. Now that you know what renters and homeowners insurance covers, let's discuss why mortgage insurance is different and who it protects. Unlike renters and homeowners insurance, where it's meant to protect you, mortgage insurance helps to protect the lender who issues the mortgage. This is typically a requirement by the lender as it gives them protection in the event of non-payment. According to the Consumer Financial Protection Bureau, there are different types of mortgage insurance depending on the type of loan that you took out. For conventional loans, they will use a private company, so the rates can often depend on your down payment and your credit score. According to the Bureau, this option is typically cheaper than the Federal Housing Administration rates, and this is also paid monthly. Federal Housing Administration or FHA loans have insurance premiums paid directly to them. The cost is not dependent on your credit score, but it is often including an upfront cost that is part of the closing costs along with monthly costs included in your mortgage payment. For U.S. Department of Agriculture loans, or USDA loans, they mirror that structure of the FHA, with the premiums being paid to them and seeing the cost both at closing and in the monthly payments. With VA-backed loans, they are slightly different in that the VA backing essentially takes the place of the mortgage insurance. However, those eligible will see an upfront cost based on their type of service, down payment, disability status, whether it's a refinance or a purchase of the home, and whether it's your first VA loan or not. One thing that the Bureau warns of is to be wary of a piggyback mortgage. To ensure you are making the best financial decision for yourself, you should compare the total costs. We hope that this has been helpful for you. If you get anything from this short presentation, remember that renters and homeowners insurance is meant to protect you, while mortgage insurance protects the lender. Remember to shop around so you can make the best financial decision for yourself with all the info.